Hello, it's Robert Miner with Dynamic Traders Group with our DT trade strategies for the week beginning August 16th. This is a short video that we do for our YouTube and Twitter followers and subscribers, so you can get a little taste of what we do for our regular DT reports subscribers. We take a look at a couple markets. Hopefully there's going to be a trade set up in the upcoming week, or at least the days ahead, that you can take advantage of the information that we give you here. Keep in mind that even if you don't trade the markets that we take a look at in these videos, they're intended to be educational, so what you learn you can apply to any market and any time frame, so you can make your own decisions on whatever market you want to trade. And that's the whole focus of what we do at dynamictraders.com through our reports or software or educational material, is to make you independent so you can make decisions for yourself, confident decisions with logical and simple trade strategies. Okay, let's take a look at a couple markets we haven't looked at for a while. I hope you've listened to the videos the last couple of weeks. If you followed the analysis and setup so we had in Bitcoin, you made some pretty serious money over the last couple of weeks. And the Russell last week, it's just in the beginnings of the trend we talked about, and the other markets. Just keep on top. Use this information and make it worthwhile for the time that you spend listening to the video. Okay, finally, let's get at it. Well, we're going to look at one of my favorites. That's gold, silver, GDX. We're just going to kind of focus on gold, I think. The first report that I ever produced was back in the 80s, and that was, good grief, over 30 years ago. It's called the Precious Metals Timing Report, where it began as a monthly report for longer-term trends in gold, silver, and platinum. And of course, in the past 30-plus years, our time frames have gotten shorter and shorter as we've gotten more and more information online and real-time information. Be that as it may, it still would behoove you to be aware of a little bit of the longer trends, like what we call weekly trends, those trends that last a few weeks and even up to a few months. Let's take a look at gold, because gold, as of the end of last week, got in a very interesting position I think you want to be aware of. So this is weekly gold, and the first thing that's important coming off of this August high is a correction. It's not a bear trend, even though it lasted for several months, but it is a corrective pattern, and when a correction is complete, the trend prior to the correction should continue to a new extreme. That means the bullish trend should eventually continue to a new extreme. So our focus in recent weeks, really in recent months, has been to identify if gold gets in a position to complete a correction. It got in that position last week. So here we are with gold coming off the March low. We anticipate that's probably a wave 4 corrective low. We got a question mark, hasn't been proven out. The advance into June, probable 1 or A. Again, this is Elliott wave talk. Elliott wave simplified is really, really helpful. So I encourage you to learn the basics. Had a 5-wave decline for a probable wave A, little ABC correction into the high where it was flat here for 4 weeks. Now this is the bar this past week, which is really interesting. Boy, we just spiked down much lower, almost testing this March low, but then came right back up and closed higher on the week. That is significant in that, number one, this is probably not an impulsive bearish trend. It should be part of a correction, and one of the main reasons is the closing overlap, and that is when we close into the closing range of the potential A1, this is weekly data, this is really significant, that's a closing overlap that's typical of corrections, not of a bearish impulse trend, and given that the low last week was near the extreme of what a correction can be, in other words, it has to complete above the March low, it tagged the parallel channel line, typical for a wave C, And the weekly momentums are overbought or bearish. Oversold or bearish, in a position to complete a weekly low. If we looked at no other data, this data would wake us up to develop a specific go-long trade strategy. Here's gold daily, and this is just the daily closing data. Again, potential ABC. I got a question mark. It's not proven itself out yet, but more than likely that's going to be the case. And again, we've closed into the closing range of what I got labeled a wave A. That is very typical of the initial signal that an ABC correction is complete. Now, of course, it's not confirmed until we close above the wave B high. However, we can develop a specific go-long trade strategy, such as, given that the weekly momentums are oversold or bullish, the next cycle in the daily momentum, not price cycle, momentum cycles. Momentum cycles, by the way, are more important than price cycles for trade strategy purposes. But the next cycle and bull reversal, which is probably at least a week away, if not a little bit more, that is going to be the ideal setup for a long trade, as long as when the momentum bull reversal is made, gold has not closed below the August 9th close. So that would be a dual time frame momentum setup to continue the bull trend eventually to above the June high. And the thing is, we don't forecast it's going to do this or going to do that. We identify this setup that has a high probability of outcome with minimal capital exposure, so we can position ourselves. And if we're wrong, if the market in this case continued lower, we have a small loss. If we're right, we will probably have a fairly significant gain. So that's what we're looking for probably over the next week. Now, gold is in an immediate position for a long trade, but it's a little ways away from this low, and your stop has to be a close below the August 9th close. That's a little bit away, not too far at all, depending on your time frame. But for my purposes, I like to wait until it's in a position to have completed the reversal, and then we wait for the next momentum cycle to position, in this case, on the long side. W.D. Gann used to say, the safest time to enter a trade is on the initial reaction to the new trend, and that's basically how I developed this trade strategy. Silver, basically the same position. This is all part of a correction. Potential A, B, C, D, E. And the A, the C, and the E are all 5-wave trends, as they should be. And because it's 5 sections, it's maybe not a perfect A, B, C, D, E. Let the Elliott wave academics argue how to label this pattern. What I'm telling you is that's 5 sections, each one unfolded and subdivided nicely. And as of the last weekly bar in this chart, that's last week, it was in the ideal position to complete a weekly low. So again, silver's in an immediate position to consider a long trade, or you can wait, like me, wait until the next bullish reversal in the momentum cycle occurs for the highest probability, lowest capital exposure trade on the long side. So you can review last week's video. We talked a bit about the Russell Index. And so far, we were looking at, basically, this is a week ago, Friday, August 6th, we were looking at this as a probable ABCDE correction, and we're on the verge of rolling over to the downside. Well, we rolled over sideways. We haven't really gone to the downside yet, but nothing has changed in that analysis. So what we do is we just identify what confirms that the correction is complete, and that would be a close below 2191.70. That's the last minor swing low close. The daily momentum's made the dual look back bear reversal, and they're still bearish and not oversold, so ought to be sideways to down for a few more days. But this would be the all-in, get short, get out long signal if the Russell made a close below 2191.70. Take a quick look at the ES, because I know more of you trade the ES than any other stock index. Here's the ES as of the end of the week. day 3 of dual look back overbought in the daily momentums. Usually by the 4th day of dual look back overbought, we make a price reversal. That means more than likely early next week we're going to make a price reversal. As of it stands right now, a close below 44.54.50, that's Thursday's close, would indicate that the daily high is complete, which should coincide with a weekly high. Now here's the upside limits in price, more than likely at least 44.74, 44.88. That's the 100% alternate price projections of what I got labeled a wave 1 and a wave 3. That's just begins about 10 points above the market. It's not a forecast that the ES is going there. It's basically more than likely that's the maximum upside before it completes a weekly high. That's a high that's going to last several weeks. The key time factors are from Friday the 13th into Wednesday, August 18th. And that is, and here's the real key one, actually fell on Friday, which would have been and may end up being the ideal date to complete not just the daily high, but a weekly high. That's the low, low, high. Wednesday is the 100% alternate price projection of the wave 1, and that was 22 bars up from the July 19th wave 4 low. 22 bars is Wednesday. Wednesday is also the smaller time frame, low, low, high. So we look at these dates as the latest before a weekly high should be complete is this coming Wednesday. Ideally, it was actually Friday. So what this behooves you to do, weekly momentum's overbought, daily momentum's overbought. We have a price pattern for a potential end of wave 5. We have extreme price zones just above the market. We're in the time zone, extreme time zone for the high, is that you should be developing, depending on your trading time frame, of course, go short strategies and adjusting your stops on long trades, because the upside is probably quite limited before we make at least a 3 to 5 day corrective decline, if not much more. It should be a correction greater in time and price than either what I got labeled a 2 or a 4. Now those are pretty short in time and reasonably significant in price. If you don't mind sitting through a 5 to 10% decline, no worries. Nothing you got to do. If you don't want to sit through 3 to 5 weeks of sideways to down, of 5 to 10%, maybe more, then if you're a trader, reasonably short-term trader, few days to few weeks, you'd want to be looking to develop specific go short trade strategies for next week. Well, that's it for this week. I hope you found this interesting. Again, you can use this information any market, any time frame, whether it's Forex, ETFs, stocks, futures, whatever. And I hope if you liked what you learned, you'll check out our DT reports at dynamictraders.com. Robert Miner, over and out. Stay healthy. Please stay healthy.